Welcome to Dr. Fred Markets. This is not financial advice. Every day, billions of dollars move across markets that most people don't even know exist. Crypto, stocks, AI, the signals are there if you know where to look. And that's exactly what we do here. Let's dive in.
AI stocks are just government rockets in drag. You're not investing, you're buying NASA with better marketing. Verdict first, AI is the only tech theme where the stock chart already looks like a launch trajectory, because under the hood, it behaves like a launch program. Timelines, burn rate, payload, failure rate, it's all rocket math dressed in quarterly earnings. Signal 1. Look at Nvidia today, up 1.75% to 215.2s, while the S&P 500 grinds a polite plus 0.83% to $737.62. That spread is the exhaust plume. When the market trudges and one engine rips away from the pack, you're not in a diversified market anymore. You're on a pad watching a countdown, pretending it's a broad rally. Now zoom out. Over the last few years, Nvidia didn't trade like a chip stock. It traded like a mission timeline. Long, flat prep phase, violent ignition, brief coasting, then another booster stage. Every earnings call is a stage separation. If they miss on AI data center demand, that's not a disappointment. That's a failed ignition test. Signal 2. AI Capex is literally rocket-scale spending. The giants are throwing tens of billions a year into GPUs, data centers, and power contracts. That's Apollo money. SpaceX turns cash into thrust and Starlink satellites. Nvidia turns cash into GPUs and CUDA lock-in. Either way, the trick is identical. Spend obscene money upfront, build an uncatchable moat in infrastructure, and pray the physics works. Now compare outcomes. In rockets, the failure modes are simple. You launch, you orbit, or you explode on camera. In AI stocks, failure hides. You don't get a fireball, you get slowing growth comps and margin pressure. The rocket still looks airborne on CNBC, but the fuel line got cut 3 quarters ago. Signal 3. Every speculative mania in history eventually reverts, but the ones tied to real infrastructure don't revert to zero. NASA, SpaceX, GPS, satellites, all started as insane, budget-destroying science experiments. They still ate the world. Same pattern with AI. Training clusters, model weights, and data highways are permanent hardware on orbit, not a mood-based meme coin. Here's the cliffhanger. If AI is following the rocket template, then the next phase isn't bubble pops and we go home. It's first stage separation. Savage, loud, and survivable for exactly 3 players. Here's the connection nobody wants to say out loud. AI stocks are in the post-launch, pre-orbit phase of a rocket program. You're not betting on ideas anymore. You're betting on who already cleared the atmosphere. That's why the S&P waddles at plus 0.83%, while Nvidia flies. You're watching gravity sort the payload. Think like a mission engineer, not a fanboy. Rockets only care about 3 numbers. 1, thrust to weight. 2, fuel mass fraction. 3, mission profile.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
Translate that to AI stocks in plain English. Thrust to weight equals revenue growth versus valuation. If an AI name trades at 25x sales and grows 15%, that's a fat rocket with tiny engines. Cute branding, guaranteed lawn dart. Nvidia's edge is that its revenue growth actually tried to match the vertical chart. That's thrust. Fuel mass fraction equals Capex versus cash flow. Rockets cram every spare gram into fuel. AI winners do the same with infrastructure. The leaders shovel cash into compute, power, networking, and software ecosystems. Losers optimize marketing spend and tweet about AI strategy pivots. Translation: dead stage drifting, no reignition. Mission profile: who gets paid at the end. Rockets don't launch for fun. They launch to put a specific payload in a specific orbit that creates recurring economic gravity. GPS, satellite internet, Earth observation. In AI, the payload isn't chatbots, it's the stack. Chips plus platforms, distribution. Whoever owns 2 layers prints rent forever. So here's your one new thing. AI stocks behave like launch programs, not apps. Once the rocket's off the pad, you stop asking, is space real? And start asking, which stage survives re-entry? Mechanism. Early AI was the launch. Current AI is stage separation. Stage separation looks like chaos and overvaluation, but under the surface it's just physics. Indices hug the middle, rocket stocks stretch the curve. Regulators, energy grids, even headline cycles, they're just atmospheric drag. What this means for you? You never ever judge a rocket from the fireball. You judge it from orbit time. Same with AI. Stop staring at daily candles. Start tracking who's locking in infrastructure, power, and developer mindshare. That's your orbital period. In plain, brutal terms, most AI names are marketing boosters. A few are the actual launch vehicle. Your job is not to guess AI future good or bad. Your job is to identify whose economics already look like SpaceX and whose look like a Kickstarter CubeSat dream that never left the warehouse. This is not financial advice, but here is the truth. 1. Treat each AI stock like a rocket program. Check thrust, real growth, fuel, Capex plus balance sheet, and mission, monopoly payload, or walk away. 2. Expect violent stage separation. The broad AI trade dies, but the real launch vehicles keep climbing while everything else free falls. 3. Pick one action. This week, pull up your biggest AI exposure and write down those three numbers: growth versus valuation, Capex versus cash flow, and what concrete, rent-collecting payload they put in orbit. If you can't answer in one sentence, you're funding fireworks, not space. You're not late to AI. You're just standing on the wrong launch pad. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.